Hi everybody, it's Victor here from Trend Following Trading for Beginners. Just today, I was supposed to talk about some mistake 101 of new traders usually make, but something crop up which most of us have heard the news about Thomas Cook, and I think I'll use this as an example and see the type of mistake that people can actually new traders face and what they can learn from Thomas Cook tobacco. Coming up next. Today I want to really just go into Thomas Cook. Really, only about a month ago when I talked about General Electric for America with counting tobacco and lawsuit they're facing, and chit chat about how can use trend following to profit from the falling share price of General Electric. Now in UK we have our own version, Thomas Cook, and it's quite sad. I used to use Thomas Cook when I was young, going on holiday and package deal and stuff, and it's quite a good old established traveling agency. But with the change of times, the whole market's gone down. I mean, most people go to internet or Airbnb, sell kit, basically self-service and buy their own tickets, everything else. So this is like all in one package deal from one place. It's sort of kind of windows, and Thomas Cook, like any other big company, just didn't change with the time and got cooked, so to speak. Now, if you just look at the Thomas Cook chart, which I'm looking at right in front of me now, it's like very similar to GE. There's the falling share price. If you have been using the 200-day moving average on its own, just to tell you if the share price is actually in a bull phase or a downtrend, and you can see from May time, basically the start of July, you already see that the price has been gone down below 20 moving average, and it's been down. I mean, that's around £1.20 at the time, 120 pence. And last Friday was about 3.5 pence. So in the space of like 4 months, it's gone down, loads of money. It's more than a quid out of things. And it reminds me how I used to thought, in old days when I was struggling as a new trader as well, try to catch a falling line. I mean, there's one mistakes that a lot of traders found themselves in, especially new traders who have small little bit of money, because they for share buying they want to buy as much as they can with the limited capital, and sometimes they go for what they call catching a falling knife. Basically, falling knife is the price just keep on going down, and people try to catch the bottom. They try to find good entry point at the bottom, so they can with a couple of thousand quid, buy tens of thousands of shares, hoping against hope the price recover, and then make loads of money that way. And I've been burned like that myself. And this reminds me of Teddy West, a cable company in UK. When I first got into it, I thought I can catch the bottom, because there was a couple of support in the charts and showing there's possible support above 50 pence. And I got it. I even tell my friends about it. Yeah, let's go in. And at the bottom is a good chance it will bounce, and you can make some money over there. Lucky I didn't buy much, and only like 500 shares or something like that. No, 500 quid. And my friend who listened to me bought about 200 quid. We both lost money, half our money, and I got out like when the price like 33 pence or something. So from 50p per share, it got down to like 30, 33, and I got up like 33. My friend blamed me forever for giving that stupid tips, which I thought I was convinced I can catch a falling knife. And it never make it back up, and Teddy West later on, get taken over by NTL, and then taken over by Virgin Media and so forth. So that taught me a great lesson that don't try to catch a falling knife. The share price fall for a particular reason, and there's a lot of insiders out there either you believe it or not. However legal people talk about insider trading is illegal, there are people in the know, one way or another, and then they use some other ways to profit from it or to get out of the market, protect themselves. So, and it all show up in the share price. It shows itself how that is, and if you try to catch a falling knife when the price is going down, you definitely can get hurt, big time. And now the problem is we never know. I mean, sometimes catching a falling knife seems to work. I certainly have tried that, but other times it doesn't. And especially when you most convince yourself, yeah, this share price will go bounce back up, and you will basically try to get in, buy as many as you can, and you convince yourself that you're right, even though the share price is going down, you lose lots of money. Worse still, like me, to tell your friends all about it and try to be smart ass, try to be a guru, and then turn out you got mud in your face eating humble pies. And that really taught me a very big lesson. Never catch a falling knife. Same thing for on the reverse. Don't try to catch the top. What that is you think the price can not go higher, and you basically try to short it, and it go higher still. And I've done that. I look at normally when I look at RSI, basically 14. RSI 14, and if we go on above the 75, 80 marks, I say that's overbought, and going below 25 marks, it's oversold. So to try to catch a top, sometimes I use that and look at it. If you go 80, 85, I try to go in and short that particular share or market. And sometimes it works, but a lot of times it fails because if a market is particularly strong or share price particularly strong, it can stay above the 75, 80 for quite a bit of time, even though it might come down. A couple of days I come down to basically just reset the price a bit, just some sort of reaction. If the underlying price is strong, it will basically come back up again and create a side market, a side trading channel. And if a strong market, it will then move up to the big new highs, and RSI will still be about 70, 75 or something. So I have learned that as well. I try to catch a top. Even I try sometimes that some of them gone to RSI 14 go up to like 90, and I thought, wow, I would definitely can make some money here. Just go quick dive in and out, and I lost my money. Basically, the price just gone sideways and consistently up and down, and it's range bound, and RSI stay around 80, 85, 90, up and down, and basically it basically hurt my account. So my trade on that particular one, so that got no death, and I give myself like a 3 weeks window. It didn't make any money, it didn't come down quickly. I did say chopped out, So those are type of mistakes that I found myself have been doing. So both catching a falling knife and try to pick a top, it's not really worth it. So what trend following system can do for you is, like I say in the General Electric debacle, that you follow your trend, your system, the trend become your friend until the trend bends at the other end, and then it bites your butt. But while the trend is in your moving in your favor, do not try to predict or preempt the situation. Like what I said in our last episode, don't try to be impatient. You need to learn to be patient, especially trend following. I traded today, and there's somebody called Karen Koo did like 5 tips on trend following on YouTube video. If you check my tweet, you see that link in there, and it says we really well. I mean, trend following is not for everyone, and especially for those who are impatient. Because big trends comes in far between, and when it comes, it can make you a lot of money, both uptrend and downtrend. But you never know when it happens. And if you try to predict or preempt or think, you can kind of sit tight, waiting for the trend to happen, and then when you're last on the trend, waiting for the trend to play itself out, you're just going to lose a lot of money basically by leaving a lot of money on the table. And I think that is definitely something that's worthwhile, that shows up in these Thomas Coles, or even patience. Just look at, I think, GE as well as Thomas Cole in this case. You talk about 4 or 5 months trend, downtrend, and you make loads of money out of it. But you don't stay with it and you do day trade or weekly trade, whatever, go in and out because you only think, okay, or you have a predefined profit target. You go to kick yourself at the end of it when the trend finishes, plays out. And because you're losing, left a lot of money on the table. So what you worry about, losing money, it shows up. So just using this Thomas Cook thing on its own, you can see, never catch a falling knife. Always follow the system. System can, the trend following strategy can take some time to develop. And when the trend is actually on, you make sure you can latch on to the signal and, trade the signal as it is. And don't second guess and stay there. If you don't have the strength to stay, you're going to lose a lot of money. And in this particular one, Thomas Cook, and so is GE. You have big loads of money just out of this two kind of thing. To have falling share price, and I think that is one of the main thing. A lot of new traders fall flat on his face. If they first year they always thought they can make loads of money, and they are impatient, and they don't learn from their lessons, and most of all, I don't think a lot of them don't even have a system or don't even follow the system, and that is a main issue. So for me, Thomas Cook, however bad the situation is, 600,000 or whatever, people get stranded. It's a very sad situation for a lot of travelers, especially people who booked and paid for holidays from months ahead, and now lose the shirt and couldn't get any money back. I hope they get some money back, but I mean, using this situation, however bad it is, you look at share price, you really can learn a lot of things. And the share market actually show you what happened. If you follow a simple, 200-day moving average, if you have that share, you could have gone out ages ago, back in June, July, that time frame. And you can stand aside or also make lots of money shorting a June, July time frame, that sort of thing. So I hope this episode, however short it is a bit useful. But remember, don't catch a falling knife. And don't try to catch the top. Always rely on your system. Your system will help you, especially when volatile market and so forth. So I hope this episode useful for you. A little bit short, but if you liked this kind of what I've talked about so far and all the other episodes, please subscribe. And I will go to make some more video next couple of weeks of a podcast basically on Mystics 101. It just that this Thomas Cook thing just happens over the weekend. I think we can use this as an example to learn about the type of typical problems that people see, and hope we all learn from them. So I will speak to you next few days or so, and have a good day. Bye.